Hi friends, Chitra here. Welcome to my YouTube channel. Today we are going to learn the concept, that is how can we use the moving average. How can we use the moving average based on the candlestick pattern. That is, we are going to learn the reversal candlestick pattern. So this can be used for intraday traders as well as for the swing traders also, based on the time frame in which you are looking into. Okay, so before that we need to understand what is called a moving average. So what is moving average? Moving average will be the average price for the trading instrument over a set of time frame which we are using. So for example, if you are doing intraday, what is the time frame we'll be looking into? We'll be looking into 3 minutes time frame, 5 minutes and 15 minutes time frame. So based on that, this moving average we can look into, and what is the rejection from the moving average, and whether the price is taking support at the moving average, we will be knowing. And what they will do is they will help to smooth out the price action and focus on where the current price is trading in relation to an average price over the trader's time frame. Okay, and also a moving average is a technical indicator that the market analysts and investors may use to determine the direction of a trend. Okay, so this moving average helps to understand what is the trend of the market and which direction the market is moving. If the price is trading above some particular moving average which we are looking into, we can come to an assumption that market is bullish, that particular instrument is looking bullish. So next is, what are the reversal candlestick patterns? So everyone should be aware of the candlestick patterns, what each candle is telling to us. Okay, so the market language, how we can understand this based on looking into the candlestick pattern. Okay, so these are the reversal candlesticks. So this is a downtrend, we can understand. This is a red candle and this is a bearish candle. Okay, and at the support level we can see this is a green candle. So what is called this green candle? We can see the difference between this candle and this candle. So this is a hammer candle. Okay, hammer candle means buyers are strong here and sellers try to push the price down, but buyers try to close the price above. So that is called hammer candle. So hammer candle is very powerful. This is also called as pin bar candle. Okay, so if you are getting these types of candle at the support level can be I'm going to explain the support level as the moving average. So above this we are we can take the long trade, and this is called the reversal candlestick. Okay, so the trend is bearish and we can see that there are red candles, and at the support level we are getting this hammer candle, and above we can see that bullish candle. Next is a green candle, and after that we can see that the trend reversed. Okay, so hammer candle we can consider it as a bullish reversal candlestick. So above this we are going to look for buy opportunities. That is, if you are doing an option trading, we are looking for to buy the CE opportunities, CE trade. We can enter into the CE trade as an option buyer. If you are doing an option seller, we can look for a put selling. Okay, so this is the bullish reversal candlestick pattern. So what is the next reversal candlestick pattern? That is the bearish candlestick pattern. So we have seen the bullish candlestick pattern. This is the bearish candlestick pattern. So this is an uptrend, and at the resistance level we can see that there is a strong rejection at the resistance level. Means this is the price has touched one particular level, and from there we can see the reversal. Okay, so that is what this candlestick pattern is telling to us. That is, the wick of the candle is above and body closed below. So this is a rejection candle, that is bearish rejection candle. So if we are getting these types of candles at the resistance level or any moving average below this, we can look for a short trade opportunity. As an option buyer we can look for a PE trade, that is put buying. As an option seller we can look for a call selling. Same way for the gravestone doji. This is a strong uptrend, and at the resistance level we can see an gravestone doji candle, or we can call this a shooting star or an inverted hammer also we can call this candle. Okay, so this is a gravestone doji candle. Below this we can look for a short trade opportunities, and after that we can see that there is a strong selling in the market. So the next concept we are going to learn is the Fibonacci series. So if we are using some indicators or some numbers or some logic in our trading in order to enter into the trades, we should know why we are using this particular indicator or why we are using this particular number in our trades. Why? Because that will give you more confidence in order to enter into the trade and to hold the trade based on that particular direction. So what is called Fibonacci sequence? It is a series of whole numbers where each figure is a sum of the two before it, and it starts with which number? It starts with 0 and then 1, which are known as the seed numbers. Okay, so the 0 and 1 are known as the seed numbers. The next number is 0 plus 1 followed by 1 plus 1. So 0 plus 1 will get 1, and next is 1 plus 1, and so on. It will continue. So here is the calculation of Fibonacci sequence. The number starts with 0, then 1. So we are adding 0 plus 1 will get 1. Again we are adding the preceding number with the succeeding number. That is 1 plus 1 we are adding and we'll get the number 2. And 1 plus 2 we are adding, we'll get the number 3. 2 plus 3 we are adding, we'll get 5. 3 plus 5, 8, 13, 21, 34 and so on. So here we are using the moving average as 34. Why we are using 34 moving average? Because 34 moving average is a Fibonacci number. Okay. So for this concept, we have learned the indicators and why we are using that particular indicator. Okay, so this is the Nifty 5 minutes chart. So the first indicator I'm using is moving average, that is moving average exponential. The length is 34 moving average, as I told you. Why 34? Because 34 is a Fibonacci number. Okay, click on OK, and next is the pivot point Camarilla. Camarilla pivot points I'm using in order to understand the support and the resistance level. So we have learned the reversal candlestick pattern. So the reversal candlestick pattern, we have learned the pin bar candle. So this is the Nifty chart. Time frame is 5 minutes. So the first indicator I have used is moving average. Once you go to the settings, in length section, I have added 34. 34 is a Fibonacci number. So we are using 34 moving average. So moving average exponential. I am using exponential moving average, not the simple moving average. Okay. Now click on OK. And next is the Camarilla pivot point. Okay. So we will see the reversal candlestick pattern. So what are the reversal candlestick pattern? So this is the pin bar candlestick pattern. So this is also a reversal candlestick pattern. This is the like T it will be. This is the dragonfly doji candle, and this is a doji candle. Doji, as everyone know, that it is an indecision candle. So this candle can be, wick of the candle can be long or short based on the reversal, how much it is giving. Okay, so these are the reversal candlestick pattern. So this is a bullish reversal candlestick pattern, as I explained to you. Okay. So now here we can see this is the Camarilla support level S3 we can see here, and this is the pivot point, and we can see that there is a strong reversal. You can see the wick of this candle. This is the doji candle, and again we can see there is a hammer candle and again doji candle. Okay, so we can consider entering into the long trade here. So long trade above this green candle we can consider entering into the long trade. So what will be the stop loss if you enter into the trade? So below the low of this candle can be the stop loss if you enter into the long trade, or below the pivot point. And this candles took support at the 34 moving average. So we can consider entering into the long trade. So already above S3 we can enter into the long trade, and we are getting one more confirmation, that is this candle is giving a close above 34 moving average also. So we are going to enter into the long trade above this high of this candle. We can enter the target, we can keep it as R3 or R1 or R2. I have disabled that level. If you want, you can keep that R1 and R2 to book your profits. Okay. The concept we are using here is, that is, price is closing above or below the 34 moving average, and also we are looking for the reversal candlestick pattern. Only the reversal candlestick pattern we are using. Okay, so here we can use see that there is a strong reversal on the same day, that there is a rejection from the particular resistance level, that is R4 level. We got the strong resistance and rejection also. Closed below 34 EMA, we can consider entering into the short trade. Okay, so the next day we can see how we got the trade opportunity, that is 25th September. Okay, so this green candle we got, but that is not the reversal candlestick pattern. Here also we got a in pin bar candle, but that didn't give a close above the 34 moving average, so we are not considering that trade. So here we got a rejection. So rejection from the 34 moving average and as well as the pivot point, and this is an indecision candle, spinning top candle we got. Below this we can consider entering into the short trade. Okay, what is the target? Target is S3. Again we got a doji candle, inverted hammer candle. Okay, inverted hammer candle we got at 34 moving average. So below this we can consider entering into the short trade, keeping the highest stop loss. Once this low is taken away, we can enter into the trade. First target is S3 and after that S4. Okay, we got one more long trade opportunity on the same day. Here we can see that there is a doji candle which gave a close above the 34 moving average, and again one more green candle which gave a close above 34 moving average. But here in this doji candle we are going to enter. So once this high is taken away, we can consider entering into the long trade, keeping the low as stop loss. So what is the next target? Next target is the pivot point. We can see that there is a big up move in the market. After that we can see the price has touched the R4 level. Okay, we can see few examples from the Bank Nifty also. Okay, so this is the Bank Nifty chart. So while entering into the long trade, always consider entering into the green candle. While entering into the short trade, look for red candle. Okay, so here this is a red candle, so we are not entering into the long trade. Again we got one more green candle, that is a pin bar candle, and we got the price gave a close above the pivot point also. Low, keeping the low as stop loss, we can consider entering into the long trade. Okay, for above this green candle, the target is R4. Okay, again we can see one more opportunity here. So these are not the reversal candlestick pattern, so we are not looking into that trades. So this is a strong reversal candlestick from R4. So below this low is taken away, we can consider entering into the short trade, and we can book the profits at the pivot point or at the S4 level. We can see that there is a huge big fall in the market. So the concept is we are looking to enter into the trade only at the reversal candlestick pattern and at the major level, that is it can be pivot level or at the resistance level R3 or R4, support level S3, S4, like in that level you can consider entering into the long and the short trades. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.